Hey everyone, and welcome back to the Noob Selling Options channel. Today, we're going to follow the money. I'm going to show you step by step a real-world trade where I took profits from a big winner and immediately redeployed that cash into a new position to start generating income. This is all about keeping your capital moving. All right, let's get right into it.
So, what kicked this whole thing off? It was this number right here. A nice, clean, realized gain. But taking a profit is just the beginning of the story. The real strategy, the fun part, starts right now.
And here's the proof in the pudding. On the left, you can see where we got into Microsoft back on March 21st, and on the right, that's the exit on April 23rd. Just a simple, profitable trade that gave us the ammo for our next big move.
All right, so let's break down that Microsoft trade. This was the engine that powered this whole capital rotation. You really got to understand this part to see why the rest of the strategy makes so much sense.
Okay, check out these numbers. We were only in this trade for 33 days. We put in about $5,800 and walked away with a profit that was over 9%. In just over a month, that is a fantastic return, and it gave us exactly what we needed for the next phase. So, it was time to say goodbye to our Microsoft shares. They did their job perfectly.
Now, this brings us to the million-dollar question, right? Why on earth would you sell a winning stock? It feels wrong. But for me, it was time to pivot. It was time to reinforce the walls of what I call the AI fortress. And this right here, this is the core idea. It's so important. Money sitting around in a stock, even a winning one, isn't always working its hardest. The name of the game is to keep that capital in motion, always flowing towards the best opportunity you can find today. So the mission was crystal clear. Take that cash from the Microsoft win and put it right back to work. And the target, another one of my favorite AI plays, ServiceNow, or ticker NOW. The thinking was pretty simple. I felt ServiceNow had more room to run in the short term and was just set up perfectly for the income strategy I wanted to run.
Okay, time for the action. Let's see how we actually built this new position. We didn't just slam a market order and buy it all at once. No, this was done piece by piece to build a really solid foundation.
You can see here, I started small, just dipping a toe in the water, buying little lots of 5 shares here and there. The idea is to patiently build a core position before we commit all the capital. We're slowly working our way up to that magic number of 100 shares.
And boom, here's the main event. April 23rd, the very same day I sold Microsoft. That capital didn't sit in cash for more than a few hours. It was immediately rotated over, and I bought the big chunk we needed to get us right up to our 100-share target. That number is absolutely critical for what comes next.
So let's just recap what we did. We've now got our full battalion, just under 100 shares of ServiceNow. We deployed about $8,800. But the most important number on this entire screen is that average entry price, $88.41. Remember that number. It's our cost basis, and every decision from here on out revolves around it. Now we get to my favorite part. We've got our shares, the capital is in place. It's time to put that money to work, instantly. We're going to do that by selling something called a covered call. It's an options contract we can sell because we own those 100 shares to back it up or cover it.
So the second those shares settled in the account, I sold this call option. Now, what is that? Well, it's basically a contract where I agree to sell my 100 shares at a set price, that's the strike price, by a certain date. And just for making that promise, somebody pays me cash right up front. We call that cash premium, and it's pure instant income.
But wait. There's more. I wasn't quite satisfied. I made another tactical move. I rolled the option. That's just a fancy term for closing out that first trade and opening a new one, but this time at a lower strike price of $89. Now, why would I do that? Simple. By agreeing to sell my shares at a lower price, the market was willing to pay me way more cash today. It's a trade-off, really, a little less potential upside on the stock for a lot more guaranteed cash in my pocket right now. And there it is. After that quick adjustment, the total cash I collected was $290. That's for an options contract that expires in just 8 days. I mean, come on, that's immediate income we generated literally minutes after buying the stock.
So, this is the really cool part. Where does this leave us for the week? Well, this is the magic of selling covered calls. We've literally engineered a situation where we have 2 different ways to win. It's a beautiful thing. Let me show you what I mean. So here are our 2 paths to victory. In scenario A, ServiceNow goes up and closes above our $89 strike price. If that happens, our shares get called away, meaning we sell them for a profit.
In scenario B, the stock just kind of chills out and stays below 89 bucks. In that case, we just keep our shares and all that cash we collected. Let's run the numbers on both.
Okay, scenario A, the quick profit. We sell our shares at 89. Since we paid $88.41, that's a small gain of $59. But, and this is key, we also keep the entire $290 premium. So our total profit for the week would be a sweet $349. That's almost a 4% return on our capital in a single week. I'll take that any day.
Now, what if scenario B happens? In my opinion, this might even be better. We get to keep our ServiceNow stock. That $290 is just pure straight-up profit. And here's what's so powerful. That premium effectively lowers our cost basis. So instead of owning the stock at $88.41, it's like we bought it for $85.51. We still own a great company, but now we have a huge safety cushion and we're all set up to sell another call next week and do it all over again. It's just a fantastic position to be in.
So that brings me to my last thought, and it's really a question for you. It's so tempting to just let our winning stocks ride forever, right? But sometimes the smartest move you can make is to harvest those gains and redeploy them. So take a look at your own portfolio. Is there a winner in there that you could use to fuel a new, more active strategy? Hey, if you got some value out of this tactical breakdown, do me a favor and hit that like button and subscribe for more deep dives into real-world trading strategies. We're going to keep an eye on this ServiceNow position and see which of our win-win scenarios actually plays out. Thanks so much for watching, and I'll see you in the next one.